Cryptocurrency, it's the buzzword of the decade. Some people swear it's the future of money, while others call it the biggest financial bubble of our time. So, where does the truth lie? Should you invest now? Let's dive into it, break it down, and really understand what's going on. First off, let's talk about why cryptocurrency even exists. At its core, crypto was created to be a decentralized form of money. No banks, no governments, no middlemen, just people, transactions, and technology. Sounds liberating, right? But that idea is much more complicated in practice. Think about it. The idea of removing central control is appealing, but it also means there's no safety net. If you lose your crypto wallet key, that's it. It's gone. Forever. So before you jump in, you've got to understand the risks. Now let's talk about the hype. The reason everyone's talking about cryptocurrency is simple. People see others making a fortune overnight. It's human nature. We're drawn to the idea of quick wins, especially when life feels slow or we're stuck in a routine. You hear stories of someone investing $100 in Bitcoin back in 2010 and now being a millionaire. That's exciting. But here's the thing. Those stories are rare. What you don't hear about are the thousands of people who invested late when the prices were sky high and lost a lot of money when the market crashed. Here's where discipline comes into play. Successful investing, whether in crypto or any other asset, requires discipline. You can't be swayed by emotions. When you hear everyone around you saying, "You've got to buy now, prices are going to the moon," that's usually a sign to pause and think. Emotional decisions in investing are almost always bad decisions. Greed and fear are your two biggest enemies. The moment you feel either of those emotions influencing your choices, step back. Now let's talk about hard work versus smart work in the context of crypto. Hard work is doing your research. Don't just rely on what someone says in a TikTok or a tweet. Read about the technology. Understand what blockchain is and why it matters. Look into the specific cryptocurrency you're considering. What problem is it solving? Who's behind it? What's its track record? This takes time, but it's essential. Our client retractably locked me out of the US because they claimed it was an agenda. And the more I learned about smart work, on the other hand, is knowing when and how to act. For example, diversifying your investments is smart work. Don't put all your money into one coin because your friend said it's the next big thing. Spread your investments across different assets. That way, if one fails, you're not wiped out. Smart work also means setting limits. Decide in advance how much you're willing to lose. If your investment drops to that level, sell. I think don't hold on out of hope. Hope is not a strategy. Speaking of losing, let's talk about volatility. Cryptocurrency markets are wild. Prices can swing 20, 30, even 50% in a single day. Imagine waking up and seeing your investment cut in half overnight. That's the reality of crypto. If you can't handle that kind of stress, it's probably not the right space for you. And that's okay. There's no shame in acknowledging your limits. In fact, that's smart. But let's also look at the other side. Why are some people so confident in crypto? Well, it's not just about the money. It's about the technology. Blockchain, the technology behind most cryptocurrencies, has the potential to revolutionize industries. It's already being used in supply chains, healthcare, and even voting systems. The potential is huge, but here's the catch. Not every cryptocurrency will succeed. And just like in the dot-com boom of the late 90s, many projects will fail, only a few will thrive. The challenge is figuring out which ones those are. Fascinating stuff. I love the concept of collaboration. Now let's address the big question. Should you invest in cryptocurrency now? The honest answer is, it depends. It depends on your financial situation, your goals, and your risk tolerance. If you're struggling to pay bills or don't have an emergency fund, crypto should be the last thing on your mind. Your priority should be building a solid financial foundation. Investing is not a way out of financial trouble. It's a way to grow wealth when you're already stable. If you're in a good place financially and are considering crypto, start small. Only invest money you're willing to lose. Think of it like this: if losing that money would keep you up at night, don't invest it. Period. And don't borrow money to invest in crypto. That's a recipe for disaster. You're putting yourself in a position where you could lose not just your investment, but also end up in debt. And so, that's not smart. One thing I want to emphasize is the importance of controlling your mind. Investing, especially in something as volatile as crypto, is a mental game. You need to stay calm when prices drop and not get carried away when they rise. It's easy to feel invincible when you're making gains, but markets don't go up forever. There will be corrections, crashes, and bear markets. If you're not mentally prepared for that, you'll make rash decisions. And that is lip service. Let's talk about the herd mentality for a moment. When everyone is rushing into something, it's usually too late. Think about it. By the time you hear about a coin skyrocketing in value, the early investors have already made their money. You're the one buying at the top. And when the price drops, you're left holding the bag. Don't follow the crowd. Be strategic. Be patient. Success in investing is about playing the long game, not chasing quick wins. Another thing to consider is regulation. Governments around the world are still figuring out how to deal with cryptocurrencies. Some countries embrace it, while others are banning it. Regulation can have a massive impact on the market. If a major country announces strict rules, prices can plummet. On the flip side, positive news can drive prices up. But the point is, the market is heavily influenced by external factors, many of which are out of your control. A lot of the contracts are implemented by private companies. And if you don't have access to liquidity, you're basically profitable. That's why it's crucial to stay informed. And let's not forget about security. Cryptocurrency is a prime target for hackers. If you're investing, you need to take security seriously. Use a reputable exchange, enable two-factor authentication, and consider storing your assets in a hardware wallet. It's not enough to just buy crypto, you need to protect it. One mistake, like clicking on a phishing link, can cost you everything. Which leads me to my number one, wallet clues. And my favorite business, Blockstone. Finally, let's talk about mindset. If you decide to invest in cryptocurrency, don't view it as a get-rich-quick scheme. That's the wrong mindset. View it as an opportunity to learn, grow, and potentially benefit from an emerging technology. Even if you don't make a fortune, the knowledge and experience you gain can be valuable. But remember, it's just one piece of the puzzle. Your financial success doesn't depend on crypto alone. It depends on your habits, your discipline, and your ability to think long-term. So what's the truth about cryptocurrency? The truth is, it's neither a guaranteed path to wealth nor a complete scam. It's a tool. Like any tool, it can be used wisely or recklessly. The decision to invest should be based on careful thought, not hype. And above all, it should align with your financial goals and your ability to handle risk. So